Good morning, everyone. I am Ravindra Rao from Kotak Securities Commodities Research Desk, and I welcome you all to the weekly commodity roundup. US dollar has been dominating since last 5 out of 6 weeks as hawkish Fed and Putin's mobilization of 300K Russian troops has taken it to fresh two-decade high. As expected, Federal Reserve raised interest rates by 75 basis points for the third consecutive meeting. And maintained their hawkish stance. However, FOMC projections indicated lower growth for 2022 and no rate cuts before 2024. That took market by surprise. In line with the prospects of aggressive rate hikes in the near term, US 2-year Treasury yields jumped to 4.27%, highest since 2007, while 10-year Treasury yields touched fresh 11-year high at 3.829%. GDP growth estimate was reduced from 1.7% to 0.2%, hinting towards an impending slowdown. Dollar index we feel is it has come out of the resistance near 110.50 and 111, and if it sustains, I think this week will be very crucial. If in this week it sustains above 112.50, 113, then there is a chance it might move further higher, and the next resistance is straight near 121. On the flip side, if it doesn't sustain and if it moves lower this week below 110, then we can say that there can be a reversal. But we need to see how this week shapes up. So I think this week's move will be very important in dollar index. Now, as a result of dollar strength, commodities were weighed down mainly because of global growth concerns as major central banks' commitment to tame inflation increased prospects of economic downturn. In case of gold, although COMEX gold was supported by safe haven buying in the early part of the week amid growth concerns and fresh geopolitical issues from Russia, price slipped below $1,650 an ounce, lowest since April 2020, as again stronger dollar and higher treasury yields dampened demand for the yellow metal. Both investment and speculative interest seems to be declining. SPDR gold holdings currently stand at 30-month lows at 947.23 tons, while COMEX gold FNO saw most bearish position in almost 4 years in the week through September 20. COMEX silver too fell by more than 2%, weighed down by negative trend in both gold and industrial metals. On the price front for the upcoming week, for this week, we expect gold to trade with a lower bias. There was a very good support near $1670 in case of spot gold, and that is taken out and price closed well below that near 1643.44. So the next downside from here on is closer to 1590.94, which is the 252 week moving average, and there is a possibility the bears might pull it lower towards that. On the flip side, 1689 to 1695 would be the resistance zone. If it moves above that, we might say that we might conclude that there is a short-term bottom near 1640, 1630. But as of now, it looks a bit on the downside, and we expect another $30-40 downside from here on. In case of MCX gold, 49,990, 950 remains to be a very good resistance. So until that holds, it will trade with a lower bias. However, rupee weakness against the dollar is supporting the domestic market. But if the international prices come down, then even domestic prices might come down. Although the intensity might be a bit slower due to the depreciation in the rupee. In case of WTI crude oil witnessed fourth consecutive weekly loss and dropped nearly 7% last week to below $80 per barrel as fears of demand weakness owing to slower global economic activity outweighed supply related concerns from Russia and prospects of more output cuts from the OPEC. On the price action front, we expect even crude is slightly expected to trade with a sideways to negative bias. Although $77 looks to be a very good support, if that is taken out, we are headed towards $65, $63 on the lower side. But till that holds, till $77 holds, there is a chance it might again move up to 82, 84 levels near the resistance, which is near 85 half dollars. So until that holds, we expect it to trade within a range So the upper bound would be $85, 84, and on the lower side $77. So look out for the breakdown below 77 for further downside. Otherwise, we expect a sideways consolidation move possibly in this week. In case of natural gas, prices finally broke down below 598 on the MCX, which was a very good support. And prices are further trading lower, and there was a possibility of it testing 540. It came down till 544, and the prices stayed there. So I think that would now become a very good support. If 540 is taken out, then we are headed towards 480 kind of levels on the downside. Whereas if the support holds near 540, we expect a sideways to consolidative move between 598, which was a support. Now it has become the resistance, and on the downside 540 would act as a support. So this too would be the range. Below 540, we are headed more downwards towards 500 to 480. Finally, in case of base metals, all the base metals on the LME closed more than 4% lower for the week on worsening macroeconomic situation and stronger dollar. Dismal manufacturing PMI figures added to concerns of stalling factory activity globally. LME copper has now come down to 2 months low below $7,400 a ton, hit further by 5 consecutive sessions of inventory additions, while rising Chinese output and exports amid muted downstream demand pushed LME aluminium to 18-month low at around $2,158 per ton. Overall buying interest could be seen at lower levels in some base metals on restocking ahead of National Day holiday in first week of October. In terms of price action, we feel aluminium looks a bit weak because it has given a breakdown on monthly chart, and on the MCX 202, 201 was a good support, and that has finally been penetrated by the bears, and there is a possibility it might head towards 2000 to $1,950 on the LME, and if we talk about MCX, there is a possibility it might come down till say 178 to 184. So sell on rise is the strategy in aluminium until 202, 203 holds on the higher side. So to conclude, global risk appetite may continue to remain low as speeches by ECB President, Fed Chair and several FOMC members will be closely watched. Besides, volatile situation in Russia, which has both demand and supply side repercussions, will keep markets nervous. Also, investors, traders will cautiously await US GDP, core PCE and Chinese manufacturing PMIs for the clue on economic situation. So that's all on this weekly edition. All the best and trade safe. Thank you.